What a flapjack flipper of a year it has been in 2025, right? I mean, just think about all the drama. Think about all the craziness of this year. Fidelity has us at a 22.2% return over the past year in the public count, so done very, very well, which this should be back-to-back-to-back years where we've absolutely decimated the market overall. Congratulations to everybody out there doing very well for yourselves, especially everybody that's out there crushing the market returns. That's what we're going after in this game over time. Now, AMD stock, this is so close to a double up in the public count now, up $278,000, up 97.5%. It is so close. Not a lot of people understand what's absolutely going on with AMD right now, and it's very important you do so. Celsius Holdings might be the next double up for the public count. This stock we're now up $80,000 on, up 82% on this one. We're looking at Revolve. Revolve's a sneaky double up here, up 137% on the stock. Not a lot of people understand what's going on with Revolve there. Netflix, this stock was $130 plus 6 months ago. Now I'm getting questions about it. People are like, what about Netflix stock? Is this a buy here? The stock keeps going down, $96 here today. 4 core subjects we'll get into in this video. AMD. We're going to talk about AMD right at the top of this video. A lot of people are still very confused about AMD, why the stock is showing so much strength, especially versus Nvidia. What is going on there, what's transpiring, where things are headed. I'll get into all AMD stuff right at the beginning of this video. Number 2, Celsius. What is going on with that stock? Why am I not even remotely close to interested in selling my shares? Why am I actually buying shares right now? I just opened up another Celsius position, another portfolio just on Friday. Why am I doing that? We'll speak about Celsius in this video and the opportunity there. Revolve. Revolve might be the stock that gets the least attention of any stock I probably talk about. That needs to end. We'll talk about what's going on with Revolve's business model, why this matters so significantly. Netflix. We'll talk about my opinion on Netflix, given that so many people are asking me questions about it and those sorts of things, and the deal and whether it's going to go through or not. I'll give you my perspective on all that in this video here today. These gentlemen, they're always sleeping in my backyard. And I saw them sleeping today. And I was thinking, because, I don't know, at the guard gates, they let them in to do work on my backyard at like 7 a.m. I thought they had to wait till 9. And, you know, I like to sleep in a little bit because I go to bed really late. And they're always got their wheelbarrows going right by my bedroom. I'm like, ah. So I was thinking about running my wheelbarrows by them while they took their nappy. But I didn't do it. Didn't do it. I'm too nice, okay? I'm too nice. Now, one thing only I need from you guys is I need you just to, if you could just do one little nice thing for me, that's all I need from you. Just hit that thumbs up button. That little thumbs up icon, if you could just make it glow, that would be the nice thing to do for me today. And that's all I need from you. If you want to be subscribed to the channel, you can certainly subscribe. We're well over 900,000 subscribers strong on the channel now at this point in time. And I'm thinking about maybe getting an SF90 back half of next year. If you ever got an opinion on that, let me know on Instagram. My Instagram's always linked in the description area down there. I know a lot of you reached out to me, shared your opinions and perspectives on that. And the exact one I'm looking for is I got a lot of people DMing me, asking me what exact one I'm looking for. This is the exact look of an SF90 I'm looking for in regards to color scheme, interior, exterior. That's the one right there. They actually have one at Las Vegas Ferrari right now, but it's brand new. From my understanding, the guy, he just couldn't afford it in the end. He got the whole thing built, and so they got it down there, but they want 600-something thousand because they'll never discount a new Ferrari. That's like something like, you basically, doesn't matter what's going on in the marketplace, they'll never discount a new Ferrari. And so I drive that off the lot, I lose $100,000. That doesn't sound too good, man. That doesn't sound too good to me. So we'll wait till the second half of next year. Values will likely keep dropping the next 6 to 12 months on those babies, okay? Alrighty, first one up here, AMD. What is going on here, okay? Let me break it down for you, and let me tell you where the stock's headed and what's happening here. Listen, we're so close to a double up here, so close in regards to AMD in the public count, right? This is what we go for. We go for the double ups. Whenever I buy into a stock, I'm thinking about, can I potentially double? Is it realistic for me to double my money in the stock over the next 3 years? That's what I'm actually going for. A lot of people might think like, I'm going for the next 10x or 100x opportunity. No. Like if that comes and there's an opportunity like that, and I think there's an opportunity, like that's great. But that's not what I'm actually going for. I'm looking for opportunities in the market, arbitrage in the market, where I'm like, this stock has a pretty high probability of doubling up or more over the next 3 years, essentially. And that's what I was able to find with AMD. If we think about stocks that I've over 10x'd my money on since 2019, there's been 3 of them. Tesla, 2,000 plus percent gainer there. Palantir, 2,000 plus percent gainer there. And ELF's over 1,000% gainer, right? Now, I bought into Nvidia at the end of 2018, beginning of 2019. I wish I would have held that so bad. But I didn't really understand the business model to a high extent at that particular time. So I made I think 30 or 40% on the stock and just cashed and took my profits and ran. But you got to understand, with those type of opportunities, a lot of risk comes with them. Back when I was buying in Tesla, it was seen as a very risky stock. It was a huge money loser. I thought they were going to flip to profitability and all those sorts of things, and they did. And that's great. I made crazy money, but it did come with a lot of risk. Things could have went wrong. Maybe they never reached profitability, right? Could have been a problem. Palantir, same exact situation. Palantir used to be a huge money loser. I started buying in that stock very heavily in the back half of 2022, right? And then kept buying at the beginning of 2023. Palantir was seen as a riskier stock back then. People didn't understand the business model. Growth rates kept going down. People are like, I don't know about this business model, right? Stock went all the way down to $6. Obviously, things turned out pretty good with Palantir. ELF, that was a $7 stock and some change when I bought into that back in 2019, the public count. There was a lot of questions about ELF. The bottom line was looking rough for ELF. The margins were looking rough. Revenue was looking rough. Everything was looking pretty bad for ELF, right? I thought they could turn things around. I thought everything was temporary. It was temporary, and ELF obviously turned around their business model in a massive, massive way, right? And so all came with risk. And then Nvidia, I didn't really understand the GPU market that well back when I bought into that. So I was kind of taking a little bit of risk. And once I got a chance to take a little 30, 40% profit, and I'm like, I'm out, because I just didn't quite get it at that time. So they all came with a lot of questions, came with a lot of risk. Got to understand, you don't always need to aim for that type of opportunity. Those are very few and far between, right? Think about it. I spend all day, every day, looking into stocks, right? And how many 10x plus stocks since 2019? 3, which is amazing. How many other people have had 3 stocks, 10x or more since 2019, which is incredible. But think about how few and far between those opportunities are. I might be lucky to find one of those opportunities every 2 years, every 3 years. One of those opportunities might come to me every 2 or 3 years. Meanwhile, there's going to be plenty of other opportunities in the market over 2 or 3 years. I could find several stocks, I believe, every 2 to 3 years that will 2x or more, right? Several, not just one, several. And so those 10x opportunities, man, they are few and far between, and they come with risks. Now, in regards to AMD, it's very important everybody understands what's going on here. Okay, listen. I posted this on my X page here today. If you ever want to follow me on X, it's always linked in the description area of all my videos. You can go on down there. 18 months ago, honestly, I was irrelevant on X, and I think because you guys showing up in my huge YouTube following, now we're popping on X. It's unbelievable. We get more views on X now than honestly a lot of Wall Streeters that are big names on Wall Street. I'm kind of shocked by it. AMD outperformance over Nvidia will get much more extreme the next 18 months, I believe. This shows you since the April lows, AMD stock is around a double up of Nvidia stock performance. You must understand 2026 will be the last huge year of growth for Nvidia, while AMD has 3 to 4 huge growth years ahead. And if you look since those April lows, AMD stock's up 184%, Nvidia stock's up 93%, right? Huge discrepancy. And it used to be the opposite, where Nvidia stock was just blowing away AMD, but everything's obviously shifted and changed this year in a pretty significant way. Now, if we look from January 2023 to January 2025, what do we see here, right? Wall Street bought up Nvidia stock rapidly. The stock went up 800+% from January 23 to January 25. That's unbelievable. AMD stock, on the other hand, went up 81%. It was kind of sleepy. Because if you're a Wall Streeter, right, or even a retail investor, why would you have bought AMD 2023 to 2025 when Nvidia had all the growth, right? This doesn't make sense. AMD's growth rates were not there. Nvidia's growth rates were there. So if you were looking for where the momentum is, where the big opportunity is over the next few years, you should have looked to Nvidia. That's the one that had it, right? It didn't make sense to buy AMD. That's a lagger type stock. It's just not there, right? Now, everything's been flipped completely. If we look at January 2025, so basically the beginning of this year, to now, AMD stock's up 83%, Nvidia stock's up 34%, which, by the way, that's still really good performance. The fact that Nvidia's up 34% is nothing to sneeze at. It's just not even remotely close to AMD's 83% gain, right? But now it's if you're a Wall Streeter, if you're big money, why would you buy into Nvidia right now? when you know AMD is the one that's going to have way better growth rates in future years. You got to understand, like Wall Street loves a story where the revenue is going to accelerate, right? Revenue growth rates are accelerating. Nvidia is now in a deceleration cycle they're going to be going into in 26 and then especially in 2027. So if you want the big time growth, you go for AMD. If you want kind of, let's say it's going to be more consistent, smaller growth, that's going to be Nvidia here in future years, right? So that's why AMD continues to see upward pressure on that stock, and people are just buying in. Every sell-off gets bought right up in AMD. Look at what happened just, what was that, 2 weeks ago? I think it was 2 weeks ago. AMD stock falls to $195. I believe it was on the whole Google situation, right? Google launches some chips. Meta might spend a few $1 billion with them out of a capex that's probably going to $100 billion a year. And so like everybody freaked out. They sold Nvidia, they sold AMD. AMD got all the way down to 195, and today it's 221. Like just like that, boom, in a matter of 2 weeks. It's not like the market exploded higher in the last week and a half to 2 weeks. It's just at the end of the day, like people understand AMD's going higher. And so they buy in, right? If we look at Nvidia's growth rates, they're still going to be stellar next year, right? You're looking at growth rates for these quarters next year, anywhere between 40 and 60%, right? Phenomenal, amazing. But the issue is that growth rate is down significantly from where it was a year ago, 2 years ago. And then if you look at 27, you could be talking about growth rates going all the way down to under 20%, right? Which is all of a sudden people are like, ooh, like what happened to the 100% growth rates in Nvidia? What happened to the 50% growth rates, 80%, right? And all of a sudden you go to report a 19% revenue growth number, people are going to be looking like, oh boy, is this about the end of the growth cycle in regards to Nvidia, right? Meanwhile, you look at AMD, and the contrast there is unbelievable. Lisa Su's talking about 35% plus compounded annual growth rate of overall business revenue. But even more importantly, she's talking about a 60% CAGR, compounded annual growth rate for the AI business over the next 3 to 5 years. 60%, ladies and gentlemen. Keep in mind, Lisa Su could be sandbagging a bit here in regards to this number, okay? Don't be surprised. Like, it's very common for AMD to beat whatever analysts have for EPS estimates, revenue estimates. You can look back at the history and look at how many quarters Lisa Su comes in and beats what expectations were. It's incredible, right? So when we talk about this sort of growth rate, I'm sorry, but NVIDIA's compound annual growth rate for their AI business is not even going to be remotely close to these sorts of numbers over the next 3 to 5 years, if we're thinking about 2026 through 2030, right? And so NVIDIA can't report anything close to that, 2026 to 2030. AMD's going to, that's where you're getting the big growth, right? Now, it's also important to understand AMD's AI strategy and how that differs from NVIDIA for 2027 and after, okay? The big thing that AMD's really going to have going for it, okay? You got to understand all these massive companies that are spending fortunes of money right now on the infrastructure, all these chips, okay? Listen, these companies are maxing out their budgets. They don't have much more room after 2026 to up their budgets, their CapEx budgets. Like they're maxing out. Even with their revenue growth, like it's been growing so exponentially, like they're going to have to start flatlining it in 27, 28, 29, okay? Which means you have to do more with less. Because it's not like they're going to be like, oh, we don't have to buy chips anymore. They're still going to need the infrastructure, continue to build, but it's not like they can go double up their CapEx again in 26. They can't double it up again in 27. They got to start bringing that numbers down substantially, right? So total cost of ownership becomes very important. And this is where AMD has a great opportunity to win when it comes to efficiency of their chips and being able to do more for less, okay? Also keep in mind, NVIDIA's chips have been phenomenal for training these LLMs. Training has been very important the first few years of this AI cycle, but inference is likely going to be massively bigger long term. Jensen's talked about that, and Lisa Su's talked about that several times. Okay, so you got the Nvidia CEO and AMD CEO both basically saying, hey, you know what, inference is going to be way bigger, which is the models actually running, right, and not just training them. And so models will always need some level of training. That's always going to be important, but the inference long term is going to be way more important. So think of yourself, if you've used ChatGPT, Gemini, Grok, anything over the last few years here, you're basically like a beta tester, okay? All this questions you're asking and trying to refine the models and whatnot, you're basically the one that's training these things, right? And so inference is going to be way bigger as people get more and more used to using LLMs and AI for different use cases, right? And eventually over time, training is going to be much less important. Just running the models is going to be what's more important, the inference part, right? And that's where AMD has a huge opportunity. Additionally, you think about from the software side, right? Nvidia's really tried to lock people into the CUDA software. That's been big for them. AMD wants to go, obviously, open source with this. And so if open source becomes much bigger 2027 and after, keep in mind that's going to be a huge opportunity for AMD, right? And we do know open source ends up becoming the bigger thing usually over time in these markets. The initial can be like something in-house. Like think about iOS in the early days of the smartphone industry, right? Like Android was basically like non-existent. What happened over the years though, right, as smartphones became more and more mature, is we watched, obviously, Android take over the market share. That did not mean Apple was doomed or anything like that. They were obviously still incredibly one of the most successful companies in the world, just as Nvidia will continue to be one of the most successful companies in the world. It's just Android was a huge opportunity, and so that's what AMD is going after over time, right? Now, also keep in mind, when we're talking about CPUs plus GPUs and using those together, who's going to be more well-positioned? You're talking about the company that makes arguably the best CPUs in the world with the company that is likely going to have GPUs that are just as strong as Nvidia. You know, there's one company that can really do that for you. So these are all things to kind of factor in there. MI 500 series down the road, that's going to be massive for this company, right? Also, keep in mind, this is not the first time AMD has played this game when it comes to stealing away market share. If you look at pre-2017, so let's just think about before 2017, right? Intel dominated the market when it came to CPUs, right? Completely dominated the market, holding nearly 100% server share. I mean, that's insane, right? And what has AMD been doing over the years? Eating into that market share, If we look here, shrinking Intel's dominance from a 9-1 lead in the late 2010s to roughly a 2-1 advantage in mid-2025. No one saw that coming 10 years ago. No one saw that coming, right? And yet it happened. And so now people are of this assumption of like AMD is never going to eat into Nvidia's market share. Like it's impossible to eat into their market share. And I'm looking and I'm like, just wait. Over this next 5 to 10 years, AMD will eat into Nvidia's market share in a substantial way, in my personal opinion. Substantial way. This is not the first rodeo for Lisa Su and that AMD team in regards to eating into a company's market share. Okay. Now, I have 7 figures plus invest into AMD, and I have 0% reason to sell this stock, right? And you got to understand, like, why am I not tempted to cash any shares in any of my portfolios? I can show you exactly why I'm not tempted to sell any shares in any of my portfolios, okay? This is my bull case for AMD. My bull case for AMD has revenue growth a little ahead of what Lisa Su does. Lisa Su's talking about a compound annual growth rate of revenue of 35% plus, right? I did a little more bullish. I did a 40% on average number per year, right? So a little ahead of Lisa Su, which once again, Lisa Su's known for sandbagging her numbers. Look at how many times she comes in and beats Wall Street estimates, something to keep in mind. So I've been being a little better than what Su's expecting. I have 50% net income growth. I have the net income margins only getting 19%. This is kind of a joke because honestly, and that's why I said this number might be low, in both my bull case and bear case, I only have 19% net income margins. We got Nvidia at like 50%-ish type margins, right? So I might be low here. Just keep that in mind, ladies and gentlemen. Like it is possible AMD could push those net income margins to a 25 to 27% range. And I have mine not even getting a 20% under my bull case and base case. Keep this in mind. If you've got those sorts of growth rates, 55 to 75 P is very fair for a company in the chip space. That puts the stock in 2029, guess where? Between about $850 and about $1,150. The stock's $220 right now. A $220. My base case, fancy way of saying this is what I expect. I have them doing what Lisa Su thinks they're going to do. 35% revenue growth per year, 26 to 29, right? 45% net income growth. And net income margins, once again, only getting into 19% come 2029, right? And where does the stock end up going to? 2028, stock should be somewhere between about 460 and about 560. And then 2028, we're talking, or excuse me, 2029, we're talking about a stock somewhere between about 670 and $800+, right? So the moral of the story is here, AMD likely has significant upside over the next several years. And so I can't even think about cashing AMD. Like if AMD was 420 today, if AMD was 420 today, I might at least consider cashing some shares because I'm like, okay, the upside might be limited over the next few years. So that might get me to sell, like, let's say AMD was 420 today instead of 220, I might sell half my position or something like that. Or at least maybe 25% of my position I would cash because I'd be like, okay, like there's not as much upside ahead, right? Because if I have the stock getting to somewhere between, let's call it 600 and 800-ish dollars come 2029, there might be better opportunities for me if the stock was 420 today out there, because there might be other opportunities that I think is an easier kind of double up from here, right? Whereas AMD is like a stretch to kind of get a double up from there. But at 220, come on, I can't even. It's not even a consideration. Like no way, baby. Okay. Alrighty, ladies and gentlemen. Before we get into Celsius, the opportunity there, Revolve and Netflix. I want to let you know the pinned comment down there today is if you're looking to apply to my private stock group, private wealth group, access to my private Discord chat, all the moves I'm making in my $3.7 million Fidelity account, access to 1000xstocks.com, all my courses, Become a Master Stock Market Millionaire Playbook, Stock Options Mastery, Dividend Investing Mastery, all that good stuff. That will be pinned comment down there. We're getting close to closing the group to new members, as in I'm closing it next week. Next week, I'm closing the group to new members. And yeah, that's the deal. Like it's been overwhelming demand in there. And I want to give my guys a nice break. Got to keep in mind a lot of the people that work for me are like have multi-millions invested in the market. So those guys need a break, man. They've been on the grind all year, and it's been incredible. But yeah, we're closing the new members next week. So this is the last week to get in there if you want to get in there as a new member. And then we're going to close up shop for quite a while in regards to new members at least. And obviously the private group always stays open for existing members. But in terms of new members, we're closing up shop next week. So do keep that in mind. Pin comment down there if you want to apply to join us before we close it up. Celsius, next up here. Okay, so Celsius. Listen, $10,000 plus gainer for me here today, setting up to be the next double in the public account. Here's the deal, okay? Ashton Invest posted this on X here today around Wall Street price targets. Wall Street's really starting to back Celsius again in a major way. Analyst price targets in the last 3 months, average looking at 64.23 on the stock. Keep in mind the stock's in the 40s right now, okay? So Wall Street's starting to really get back on the Celsius bandwagon, right? Also, take a peek at this. I don't know if you guys saw this or not. The post only got 1,000 views on X. It seemed like no one looked at it. But this was kind of interesting. Heavy hitter stepped in. They bought $1.6 million worth of in-the-money Celsius calls, expiring the day after Christmas, 12/26. Somebody's betting big on strength into year-end. That was pretty darn intriguing, right? And so in order for somebody to make that big of a move on a stock like Celsius, they got to not only be confident that the stock could show major strength in the year end, but they got to be confident that Celsius stock could see enough momentum that if they needed to sell those calls off to somebody else, somebody would be willing to take those off their hands, right? Just something to factor in there. Now, additionally, this is a rumor. Like we can't be in the meetings at Red Bull, but there's rumors. I hear little things from little birdies, and I don't know if they're true. I don't know if they're false. I don't know. Just hear little things here and there, okay? But I heard Red Bull is actually really worried about Alani. Alani's been taking off as far as growth rates there. I'm sure probably no one watching this video heard of Alani 2 years ago. And now you're going into almost every major supermarket, every store, Target, everything. And Alani's like starting to become a big brand and like significantly positioned. And I hear from so many of you guys, you go to the gym. I got a gym in my garage, so I don't actually go to the gym. But so many of you guys say you see a lot of people drinking Alani at the gym, including a lot of females as well. So interesting, right? We have an update in regards to market share. Celsius provided an update to investors on Wednesday detailing 2025 brand integration efforts, Alani new direct store delivery transition progress, and recently achieved milestones. The beverage company said more than 80% of Alani new distribution business has been transitioned to Pepsi distribution network as of December 1st. So that was last week. The Alani Nu integration is on track for completion by the end of the first quarter of 2026. Meanwhile, the Rockstar integration, because now Celsius is Rockstar, which used to be under Pepsi umbrella. Pepsi bought them years ago. Pepsi ran the brand into the ground. Maybe Celsius will be able to bring that brand back to life. If they don't, it's honestly irrelevant. Like, there's only upside in regards to the whole Rockstar situation. But meanwhile, the Rockstar integration plans currently remains on track for completion in the first half of 2026. In terms of the big picture, Celsius noted that the portfolio reached 20.2% market share in the 12-week period ended November 23rd, right around Thanksgiving. That's phenomenal, ladies and gentlemen. Worth now thinking about Celsius as a 20% plus market share company and building and growing. The portfolio grew 25.5% ahead of the energy drink category, which grew 13.7% in the same period. That's what we're talking about, baby. Growing at a more rapid clip here. Now, you got to understand this. I explained this one or two times in the past in regards to Celsius. Everybody has to understand this, okay? You got to think about the competitive landscape. We know this industry is massive, energy drinks, right? We know it's getting bigger. That's something we know. But you got to think about the competitive landscape, and it's changing substantially. You got a gentleman, John, leading Celsius, has basically grown this company from like a nothing, nobody company into a serious competitor in the energy drinks, where now the company as a total has 20% plus market share. Go back 6, 7, 8 years ago, no one would have thought this is possible. No way. It's incredible what he's pulled off, right? But in terms of its competition, you got to understand, Red Bull, the co-founder of Red Bull, he passed away in 2022. Okay, so that competition has been lessened to a greater extent, right? You don't have the big dog there anymore. In regards to Monster, the other Goliath in this industry, right? As far as them, Hilton has taken over the CEO role. Keep in mind, Monster is a company I used to own years ago, made a ton of money on it, even made some money earlier this year on it. But the big money was made like years ago for me on Monster, right? Great company. Like, they were in the prime of their kind of like trajectory, I would call it, back when I owned this company back in the day. Hilton was leading the company with Rodney Sachs. Rodney Sachs has now stepped aside. He stepped aside basically back in the summertime. They're in the wind down of their careers. Let's just call it what it is, right? They're in the wind down of their careers. As far as Hilton's 73 years old now. As far as Rodney Sachs, he's 76 years old, okay? So these are the guys that built Monster into the monster it is. Like, you know, they're just not in the prime of their careers anymore. Like, they're, I don't want to say over the hill, but they're just, you know, they're at that stage, right? And we'll all get there. Like, I'll be there someday, right? And you look at me and you'd be like, oh, Jeremy's 76. Like, he's not quite picking the same quality of stocks he was back like he was when he was 35 or 45 or 55, right? It's just, you know, it's just the way it is, right? And then in terms of competition from like upstarts or things like that, a couple of years ago, people were really worried about Prime. Prime was really pushing into these sorts of spaces. And from what we're hearing, Prime's in bad shape now at this point in time. That brand was so hot 2 or 3 years ago. The guys should have sold it. Logan Paul and KSI, who started, they missed a huge opportunity there. Now it's just a mess, a complete mess from what I'm hearing. And so you don't have that competition either from like the upstarts. So they got everything kind of on lock. They got, you know, the OGs on their way out, and the upstarts are just a disaster, right? So what it ends up being is it's a runway. Like, it's a clear runway, and the skies are blue, and Celsius is right there for to take it. And John, the gentleman leading the company, is in the prime of his career right now. Prime of his career. And so over this next many years, Celsius should continue to grow. As they grow, they'll likely take market share, right? And they can probably get a little price advantage as the years tick on as well. Remember, even a 10 to 20 cent price raise in these products over on a year-over-year basis, it can mean substantial margin uptick, right? And then as you get more international expansion as well, then you have to ask yourself, okay, what do you do with all the money you're going to start generating? Massive share buybacks. So then your earnings per share goes up at a much faster clip than your net income goes up, because you're always taking shares off the market, right? Like, this playbook's been played out before. And so is it impossible for Celsius to be a 20% plus CAGR type returning stock over the next 5-10 years? It's definitely possible. Like, it's no guarantee, but it's definitely very, very possible when you just do the math around it. You just do the math around it, right? So CELH is looking really, really good. Really, really good. It's a runway, and the runway is clear. Next one up here, RVLV. Then we'll get into Netflix, okay? Revolve. This is a sneaky double up for me, right? 137% the stock has now gone up for me in the public count. It's a $26 stock, right? Now, you gotta understand what's going on with Revolve and where this company's headed, the stock's headed, all that good stuff, okay? Look, even with the tariffs, even with dumpster fire consumer confidence numbers this year, right? Look at the latest quarter Revolve had that they reported a little over a month ago. They still grew revenue on a year-over-year basis, 295 mil from 283 the previous quarter in the same quarter last year. Gross profit went up at a much faster percentage clip. Gross profit went to 161 million versus 144 million the same quarter last year. Net income went to $21 million from $10 million, a double up in net income there, right? And so Revolve's doing a phenomenal job with the financials of this company. Look at the latest quarter. Look at the cash balance. $315 million of cash and cash equivalents. This is ridiculous. Like, think about this for a moment. The total liabilities of the company is 261 mil. So the company has more in cash and cash equivalents than they do in total liabilities. How many other companies do you ever see that? Is extremely rare. HNST Honest might be one of the very few that honestly can come to my mind that they might have. And Honest, I'm not even sure, has more cash than liabilities. I can't quite remember. But Revolve is, I'm telling you, one of very few companies that has more in cash and cash equivalents than total liabilities. Ridiculous. Ridiculous, right? Now, the chat for Revolve in the private group is completely dead. It's honestly might be the most dead chat of all the chats. A lot of times it's just Blair talking to himself. Sorry, Blair, like that chat is just dead, right? It's so funny because there's so many other chats in the private group that there's just so many people talking every single day, right? But Revolve is not one of those stocks. Like no one cares about Revolve. No one talks about it, right? And one of our private group members put this, said, I just checked Revolve's website. Their clothes are too expensive. Most people would not want to shop there, right? This is an issue with Revolve and Revolve stock and how things are understood here, right? Is what my audience is 90% male, right? The stock market investors in general, in terms of people that are picking stocks, heavy male demographic, right? Heavy male demographic. My private stock group, heavy male demographic. I think like 90% of our members, or if not 92 or 93% of our members in the private stock group are males, right? And so if people ever even want to look into Revolve, they go to their website and they see something, right? Keep this in mind. Selling expensive stuff is not a bad business model. Louis Vuitton, LVMH, has a $361 billion market cap on it. Ferrari sells, 12,000 cars a year or something like that? Maybe a little over 12,000 cars. And yet, it's a $68 billion market cap. And it has a larger market cap than companies that spend, or that build 10 times the volume, 50 times the volume, 100 times the volume, right? It's incredible. But what happens is, if somebody's doing some research on Revolve, they go to the website. First off, they're like, this isn't interesting to me, because a bunch of dudes and they're like, what, dresses, stuff like this isn't interesting, like what's going on here, right? So you see the products, then they click on it and they're like, oh my gosh, $395 for that dress, $995 for that dress, $240 for that dress, what? This is crazy, man. Who's paying that? Then they go to Revolve's other brand called Forward, FWRD, and they look at the prices there and they're like, oh my gosh, they're selling like Birkin bags and all this stuff, and I'm like, what are these prices, right? And so since a lot of retail investors are males, right, and a lot of people that invest in the stock market are males, they look at somebody like Revolve and I don't get it. Why? Why would they pay all this money for these products? This seems insane, right? Well, I can tell you there's a whole lot of females out there that would have heard that I'm looking to buy an SF90 next year at some point, second half of next year, and be like, that's stupid. Who would pay $400,000 for a car? So what? It gets you to point A to point B. So what? It goes vroom, 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 vroom. Big deal, right? Big deal. Hey, look at that. That's stupid. Why would you spend that much money on that, right? I live in Las Vegas. You know how many guys go stay at the Wynn and Encore and will blow 5, 6, 7 figures at the baccarat tables, the blackjack tables, playing roulette, craps, whatever, on a weekend at the Wynn and Encore? You know how many women would look at that and be like, why? That's so stupid. What are you doing? I don't get it, right? look at that and be like, that's dumb. Meanwhile, plenty of guys out there are like, oh, it sounds like a great time. I want to do that, right? Not everybody is going to understand spending in certain categories, right? So some guy can spend $30,000 on a bottle of wine. $30,000 on a bottle of wine. Somebody that look at that is not a wine drinker and be like, are you mad? $30,000 on a bottle of wine? What are you thinking, right? I got a couple wine coolers in my house, right? My wine coolers probably average prices in the 30s, 30 something dollars a bottle, right? So we're talking about the bottles in my wine fridge are like 0.1% of the cost of a $30,000 bottle, right? You could have 1,000 $30 bottles for the same price as somebody spending $30,000 on a bottle of wine. So you're like, why would you do that, right? Why would you do that? I spent over $200 on this bottle of cologne right here. Somebody might look at that. Why would you? That's stupid. Go buy a $20 bottle of cologne, $30, $40 bottle of cologne, right? I really like this one. I really like this one a whole lot. Joe Malone, I like it. What can I say, right? Listen, people are going to spend a lot of money on things you're not always going to agree with, but you got to understand there's a market for it. You might not be the one to go to the Wynn and Encore and blow $250,000 in a weekend. That's fine. There's plenty of people that are willing to do that, right? And they don't need 1,000 people to go do that in a weekend, right? You might never understand why somebody would spend $30,000 on a bottle of wine. That's fine. You might never understand why somebody would spend $400,000 on a car. That's fine. You might never understand why somebody spent $10 million on a house. That's fine. People are going to spend money on things that doesn't make sense. So when you see a dress selling for $900, you're like, who would spend $900 on a dress? Just understand, there's plenty of women that would gladly spend $900 on a dress. Don't think with such scarcity mentality. And just understand, a business like Revolve has every metric going up in the right direction. Their net income just doubled up on a year-over-year basis. Their revenues are increasing. Even with this bad consumer, no one has money. Oh, really? Then how did Revolve just do $295 million of revenue last quarter? 3-month span. They're doing around $100 million of revenue per quarter. Seems like those dresses are selling just fine. So, understand, plenty of people will pay for it. Okay, plenty of people will pay for it. Just because you won't spend $900 on a dress doesn't mean somebody else won't. Just because you won't spend $300 on a dress or $5,000 on a handbag doesn't mean somebody else won't. Okay, got to understand that. It took me a while to understand that as well. And then as the years ticked on, I got older, my net worth increased. I began to understand, okay? And so keep that in mind. Next up here, Netflix. People are asking me, I even saw a lot of people on X asking me, like, what about Netflix? You think it's an opportunity? Let me give my opinion on this, okay? So big news came out here today in the past few hours that now Paramount outbids Netflix for the Warner Brothers Discovery deal, okay? And some sort of like hostile bid where Paramount wants to offer them over $100 billion. Netflix, I think, was willing to offer them $82 billion. It had been approved by the boards. Now Paramount's going in and wants to do a much bigger offer. It's going to be a situation. And so this could push up the price huge because now basically the shareholders could kind of revolt. Like it's going to be a messy situation now. Like really, really messy. Paramount is kind of screwing Netflix big time just by doing this. Like big time. Because Netflix already looked like it was kind of like a done deal. It might actually end up saving Netflix long term, in my opinion, but it throws a big wrench in this whole situation. It's messy, okay? So here are my thoughts in regards to this whole matter, okay? First up, I said this, I think, to my private stock group on Friday when I first heard about the deal. I said Netflix should have never tried this. It's horrible. I don't know what they're thinking at Netflix. This has got to be this might be the only time Netflix has made a move that I'm like, what are you thinking, guys? Like, this is dumb. This is straight up dumb. Because here's the deal. Netflix going to spend this fortune of money. Imagine how much sports content rights Netflix could buy. Speaking of sports content, that's like where the real money's at, right? Live sports. Netflix could spend so much money on sports content for $82 billion, right? Like, that's ridiculous. And continue to build their ad business up substantially, continue to basically force people to have Netflix if you want to watch live sports, right? It's substantial. Think about how many shows and, different products and movies they could create. It's incredible. And so Netflix should never try to buy this in general, in my opinion. Like, it makes them into a messy conglomerate. Like, Netflix is a very streamlined business model. It's very simple. You add Warner Brothers Discovery onto this, it complicates things. Now you have all these different properties, and it's like, how much do we spend over here on content versus this other property and HBO and blah, blah, blah. Messy. I don't like the deal in general for Netflix. I think it's bad that they even got into this in the first place, okay? Now, next up here, this will be a huge hang-up on Netflix for probably the next 6 to 18 months. Because now they're going to have to figure out, okay, is Paramount actually going to be able to get through and do some sort of revote here or something? And like Paramount will actually be able to buy them? How's that going to work since the board of directors of both sides have already agreed on this? So then the shareholders are going to kind of revolt. There could be lawsuits involved, because if you're a shareholder and you're like, wait a minute, we could get $100 billion over there instead of $82 billion, we get way more on our shares. Of course you're going to want more money. So that adds a bunch of complexity in regards to the legal side. Now this is going to get even more to the forefront of regulators. And if, let's say, now Paramount is going to, if let's say Netflix is allowed, the board of directors and shareholders still vote, then it still has to get approved from the regulator side. Paramount could spend big money blocking the deal in regards to like lobbying different individuals, and it could get messy on the back end. Very, very messy. Very, very quickly here, which caused a whole bunch. And then Netflix doesn't know what they can spend money on, because now you're going to have a tie-up where you're like, we might spend $82 billion buying this company, right? And now it's like, if Netflix cancels the deal or if regulators don't approve it, I believe, I looked in the deal a little bit, I believe Netflix then has to come out of pocket several $billion. If, this is a big if the deal is blocked by regulators, or I think if Netflix voluntarily cancels a deal. I believe that's how it was structured. I'm not a lawyer, but I know a little something about law, and I believe that's how the deal is structured. So if that happens, like, then Netflix has to pay billions, several $1 billion from what I remember it being. That's ugly. like this is no situation. This is a good deal in my opinion. And it's going to be a huge hang up for Netflix. Now can they bid on sports rights over the next 6 to 18 months? Not really. Like, they don't know how much they can spend on buybacks. Shareholders are looking, and if you're a shareholder, you're thinking about buying Netflix stock. You're like, what am I buying here? Before it was easy. I'm buying Netflix. Now it's like, okay, I'm going to get all these different properties. Maybe not. Some people might want those properties and now be unsure if they're going to get those properties. Some people might not want those properties and be scared to buy it because they're like, I don't want those properties. So Netflix is going to have storm clouds around it for the next 6 to 18 months. What a mess. What a mess. So am I interested in stepping in Netflix? Absolutely not. In my personal opinion, there's just way better opportunities in the market. Like, I can think of a long list of better opportunities. Once this situation's settled, let's say Netflix stock continues to go down, all the way to Chinatown, and then this situation's solved, then maybe I step in on Netflix, but not here. It's way too messy. And I really question management's judgment. Like, if I was a Netflix shareholder, I'd be seriously questioning management's judgment that they wanted to even do this deal, knowing how messy this could get. And knowing that it's going to mess up your company, in my opinion. Things are not going to be streamlined. You're going to have all these different components of your business. I don't like it. Netflix was simple before. Now they're going to try to complicate this thing. They're going to have to spend fortunes on lawyers. Oh my gosh. No bueno. So Netflix is a new touch. Alrighty, ladies and gentlemen. Remember, think long term. Think about the type of companies, management teams you want to be in for the next number of years, right? We're trying to build portfolios that we're proud of in the 2030s. Not that we're just proud of in 2026. We're trying to build portfolios we're proud of in the 2030s, right? Great companies, great management teams, proven business models, great financial statements at attractive valuations, all that good stuff. Pin and comment down there if you're looking to apply to join private stock group, private wealth group, get access to 1000xstocks.com. Private Discord chat, all my courses, my entire library of premium courses. Get your Steel membership cards. We have our 1000X Steel membership card right there, baby. We have our beautiful private stock group, which might be my favorite card of all, my Steel card. And then we have only a select few have this card. I Can't even show you it all. It's the black card, okay, for lifetime members of the private stock group. Pin comment down there. We are closing to new members next week. So this is the last week to get in. If you want to be a new member of the private group, much love and have a great day.